There has been a revolution in stocks this year. Call them meme stocks, stonks, or momentum investing, whatever you call them, the effect has been truly powerful. Nation, at no other time in almost 2 decades analyzing stocks have I seen anything like this. A period where so many people are literally getting rich so quickly. Even leading up to the dot-com bubble, it took Cisco more than 4 years to produce a 20-fold return on its shares. But this year, shares of GameStop did that in less than a month. But the problem has been identifying these potential short squeeze stocks before that big first day run. Sitting in your pajamas in front of Reddit is no help. The boards flash with hundreds of stocks a day and only a few become those true meme runaways. Now though, we have that initial list. In this video, I'll show you that initial list and show you how to narrow those stocks down. I'll then reveal 5 potential meme stocks that could be the next to go to the moon. I'll be starting in the featured collections area of StockCard.io, a great resource for finding groups of stocks around a theme or a strategy. We'll start here with the potential meme stocks collection, a list of 295 companies with a high percentage of the shares sold short. I'll leave a link to StockCard in the video description below to check that out. And as a special bonus, I've negotiated an exclusive discount for all you out there in the community. Use the promo code BowtieNation, that's all one word in lowercase, for an exclusive discount beyond the free trial. Let's get started, but first, I've got to send that special shout out to all you out there in the Bowtie Nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now looking at that initial list of potential meme stocks, we see MarineMax, ticker HZO, which I highlighted in a video last month about Reddit stocks and is up almost 10% since. Now this initial list is based on companies with more than 15% of their floated shares sold short. It also filters out the smallest companies. So here we're looking at companies over $50 million market cap and with a high percentage of those shares sold by the hedge funds and traders. And one thing we need to define here is that idea of the share float versus shares outstanding, because it's hugely important that short squeeze potential in a stock. Now shares outstanding is all the shares issued by a company. You can usually get this by dividing the market cap by the share price, or most investing apps are going to show you the number. More important though is the share float, which is the number of shares outstanding that are actually available for investors to trade. You see, at any given time, there could be millions of shares a company has issued that are not available. Now these shares might be held by insiders or might be restricted from selling or have a lockup period on them. So the share float count is just a truer picture of how many shares are actually available to investors. Now to that initial list though, I'm also going to go into the screener here and filter for stocks between $1 to $10 a share, because that's where it seems a lot of that retail trading and the short squeezes are happening right now. And just making this small change, we narrow the list down to 68 stocks to research further. First on our list here, I've been following shares of Inseego, ticker INSG, since November of last year and really like the industry for this stock. The company is a leader in device-to-cloud networking hardware and software to enable that broader 5G coverage, faster data speeds, and lower latency, which over the next 3 to 5 years, as 5G adoption improves and that Internet of Things revolution really takes hold, I don't know of any better industry to be in. At a $968 million market cap, there are 104 million shares issued, with almost 22% of those sold short, one of the highest sold shorts in our list. Now with 56% of the shares owned by institutional investors and insiders, all we need is a slight catalyst to drive that short squeeze. And we could be looking at that catalyst for revenue growth in the global expansion campaign the company has going on. And the company is investing right now in growing its international sales and marketing, as well as a newly launched second generation of 5G products. Synchronos Technologies, ticker SNCR, is one that I've also been following for a while, a $276 million provider of cloud and software-based activation solutions for mobile users. The company is positioned as a leading cloud platform for mobile and ahead of what could be a boom in that 5G rollout. It brought on AT&T and TracFone as new customers last year, and 80% of that revenue is from recurring customers. Synchronos has 200 plus customers and more than 135 patents for a solid competitive advantage in that cloud and messaging area. A cost savings program this year helped it to reduce its operating costs by 17% and really drive that positive EBITDA growth, even as on a slightly lower sales revenue. The company has just 86 million shares available at about $3 each, but nearly 19% of that, so almost a fifth, is sold short. And I think the market growth here really helps push this one higher to squeeze those players out. And we've still got 3 more potential meme stocks to highlight, but I want to get your input on this as well. We've covered those short squeeze stocks here on the channel a few times before, and the videos seem to be really popular. But in a survey I did on the community tab last week, only 9% of you said you wanted to see more videos on that topic. So to get a better idea of the videos you want to watch, scroll down and let me know in the comments below if there's a specific topic on stocks or investing that you want to see. Next here is one I recently covered in a video on best penny stocks, $120 million biotech Imera Inc., ticker IMRA. Now, Imera isn't widely covered by analysts, but does have strong buy ratings from analysts at both Morgan Stanley and Citigroup. Imera is a clinical stage biotech developing therapies for rare inherited blood disorders like sickle cell and thalassemic cells. It's currently in phase 2 trials for its IMR 687 product for 3 indications and in preclinical for a form of heart failure. And at just under $7 a share, the company has 17.6 million shares outstanding, with 18% of that float sold short. Insiders and institutionals hold nearly 100% of the shares outstanding, so almost all of them, which really sets this one up for an easy short squeeze. And that could come at any moment, especially on any good news from these clinical trials. Imera expects to report interim data on both of its programs in the second half of this year and could start phase 3 in early 2022. Our next short squeeze candidate here is another biotech, $1.7 billion Inovio Pharmaceuticals, ticker INO. Inovio has 11 potential drugs in its pipeline with a strong mix of those external partnerships as well as its own funded products. The majority of these are in that phase 2 or later, where you start getting close to that deal-making news and the sales. And this is where you're going to see a lot of those heavily shorted stocks in those biotech companies like this. Short sellers are betting that those clinical trials go sour and don't produce the results needed. Of course, all it takes is one good product and a breakthrough result to send the shares higher and then squeeze those shorts out. Now, Inovio has the highest share count of the group, which could limit the potential for a squeeze, but with almost 23% of the float borrowed, it's also the most heavily shorted. With more than a third of the shares outstanding owned by institutionals, there is a lot of room for a squeeze here. Lordstown Motors, ticker RIDE, is the most controversial on the list, but could also be the best upside as well. Now, if you know anything about Lordstown Motors, you know the news isn't very good. First, they were caught exaggerating pre-orders for their electric truck, the Endurance. Then there was an SEC investigation into the company's reporting, and both the CEO and CFO had to resign. The company has even filed a going concern letter with the SEC, which means it might not have enough funding to survive. And the company does say it's still on schedule for production this year or next and ready to scale up making those trucks, but this is going to be a risky one right here. The shares here are down 72% from the peak earlier this year, and I'm actually surprised there's not more short selling, with only about 20% of the float borrowed and sold short. It's still got nearly 2/3, about 60% owned by institutionals, so that's some support. And sometimes when all the news is bad, there's only one way to go. Now, this was almost a $5 billion company as recently as February, so if they can just get any kind of funding or a strategic partner to begin production, those shares are going to pop. Click on the video to the right for my top picks in short squeeze stocks. 3 stocks I'm investing more than $30,000 in for those triple-digit returns. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.